So where are we going to invest? You guys are investors in all kinds of stuff. Are we going to invest in stocks, cash, stocks, bonds? It's such a volatile market. I mean, and I've never really been into the commodities and the stock market. And of course, you know, everybody's done really well in the stock market. And so it's not my area. I do real estate because it's getting rich consistently, not getting rich quick. And so gold, silver, you know, it's a peak. Stock market, we're going to kind of look at that. I want to get your feedback because you've got wisdom here about what's going on there and the economics of going on. But what about real estate? You know, hard assets. You know, and then what about entry-level housing? You know that the National Association of Realtors say that we're 4 million houses short because of the financial crisis of many years, 2 decades ago. We're 4 million homes short for what the population needs. We don't have enough houses, period. So we're filling that, and we're doing entry level because that's where everybody needs the homes. The first-time home buyers have not been out in the market. They're all renting now. That's what happens when they don't buy, they're renting. That was really good for us investors. So an entry level is where we're at because that's easy to sell, easy to manage, easy to maintain. So kind of was doing my stock market research, and stock markets and recessions. You know, going back, to the 70s, every time there's a potential recession or there is a recession, you see a pretty hefty stock drop. And it's usually when it gets to a peak. I'm not saying we're in a recession, I'm not a doomsayer, I'm an eternal optimist, but you have to be realistic about what's going on in the market right now. The debt, okay, well, we can talk about debt. I'm not an economist expert. I'm pretty much, if I can't look at this and make a heads or tails of it, then it's too complicated for me. So it's a very interesting thing. If we're long overdue, by the way, for a recession. We had the quick one back in the pandemic started, but then they just flooded the market with cash and solved the problem. That's the problem is that, but before then, it had been since 2009, 8, we were way overdue for a correction. So what does real estate do during recessions? Actually, it does really well, except for the one that was caused by real estate. This right now, our market and everything is not caused by a real estate mortgage bubble. So every time, if you look at this, every time we went through, the real estate's done well, except for the 2007 and even all the way through, even to the 2020 crisis, it's not affected. So this is the kind of thing, there's a safe asset, places to put hard assets that are going to be a little bit less volatile. Also, guess what recessions do? They bring interest rates down. And I'm not voting for recessions, just I know that the cycles of the market are going to determine somewhere along the line and we're going to have one. And that's when I'm going to refinance all my rental properties that I didn't refinance before. I'm pretty good place right now as far as my rates. But the great thing is that rates will continue to drop. What's your take on the market as far as interest rates? What do you think is going to happen? You know, remember the buzz was the Feds are dropping the rates. How did it affect the interest rates, the mortgage rates?
I mean, October 17th, right? It was the Fed
at
25 basis points.
Yeah.
So
it's
really about, it's not the actual mortgage, it's the federal rate.
Right.
I think, but the general public thinks. Well, there's some action, so I think buyers are getting out right now because of.
So the dynamic is that buyers have been on the sidelines because of property values are where they're on the sidelines because like I'm just going to wait and see. Sellers are like going, I got 2% interest, 2.5% interest rate on my mortgage. I don't need to sell. What if I sell? I got to go buy something that's going to be at 6 or 7%. It's a stagnation market. So when the Fed's already announced the rates, that was already figured in the market, and they've already figured the next 2 rate drops. So it's great news for us as real estate investors, and for news, it didn't really affect the rates at all. Mortgages are flat. They didn't drop. Sorry, they will, but they got a ways to go.